Today in crypto, Bitcoin currently is at a critical juncture in the short term, which could be bad news for Bitcoin. Also, I've got some news on Ethereum 2.0, which could still launch this year. And DeFi, it is a hot mess, but it's a hot mess that can make you rich. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild land of crypto. So let's talk about Bitcoin. Bitcoin's daily open and closes have all been within a $400 range for the last 11 days. This is some very incredibly tight sideways movement for Bitcoin. Knowing Bitcoin, we are in for a dramatic move probably coming at some point soon. The only question is when exactly is it going to happen. Bitcoin's 3.5% drop yesterday is really nothing to be too concerned about. Is more just a continuation of our sideways movement, so really nothing to worry about at this time. However, we could be in for some volatility soon, since we have seen a big drop off in volume since 11 days ago, so that could be indicating that our dramatic move is coming sooner than later. Buyers and sellers, they're both basically on the sidelines right now, sitting and waiting to see what the other one is going to do. Zooming out to the weekly, we are actually now hitting a bearish crossover on the MACD for Bitcoin. Now, this could indicate that we are in for some more price pain. The last 3 times we have had such a crossover, it was bad news bears for the market. Obviously, we're going to have to wait a little bit longer, about a week more, in fact, to see if this actually confirms and does have that successful crossover. We could bounce up from here, but I bring this up because while I remain bullish on Bitcoin, there is, of course, a lot of uncertainty and a lot of fear still in the markets. There are, of course, real risks that do remain in the equity markets, which could cause us some serious turbulence here in crypto land, from the economy to the coming presidential election, to the danger that the Federal Reserve might turn off the free money faucet, and, of course, lots of other things as well. There is a reason why we take profits constantly in this market, because it is notoriously volatile, because no one truly knows what the markets are going to do next, and we must always protect our downsides and protect our capital. As I always say, I remain a bull while we maintain above the 200-day moving average, but we could drop down to test that as support. So that could bring us back down to $9,000. But if it did, we would actually still be overall in a bullish market, just with a deeper correction within that bull market. I want to share this chart here with you that shows Bitcoin whale clusters. So there was a significant whale cluster at $10,570. And surprise, surprise, where did we get rejected? $10,590. Funny that. These so-called whale clusters form when we have basically whales who have accumulated a large amount of Bitcoin at a certain level, and they do not move that Bitcoin. These are essentially areas that have large amounts of unspent Bitcoin, and of course then becomes an area of interest for us because of the significant amount of Bitcoin at that price area. These typically end up forming into resistance levels. The 2 biggest clusters short term for us are 10,570 and 11,800. So 10,500 once again becomes the number to beat for Bitcoin. Another factor suppressing the price is the inflow of capital from miners to exchanges, which just hit a 5-month high. The last big spike was mid-August when Bitcoin peaked over $12,000. You saw miners move stock into exchanges and cashing out. That, of course, dropped us back down towards $10,000 where we are nowadays. Selling pressure for miners who still maintain large stocks, it's going to diminish as the months go by and we fade further and further away from the Bitcoin halving. Miner sales events, though, they are key because it absolutely tests the appetite of the retail buyers, who tend to be the ones mainly operating on a lot of the exchanges, to really step up and buy that stock. So far, any dips under $10,000 have been bought up pretty gosh darn quickly, proving that there is indeed strong demand to get Bitcoin under $10,000. How long can that hold? How many buyers will we see? Time will tell. But it also means that short term, miners may be looking to lock in profits as they fear, like so many people, potentially deeper corrections coming in the weeks ahead. Speaking of miners, there has been a surge in hash rate to an all-time high of 150 echo hash, which is noteworthy because it happened while the price of Bitcoin plummeted by over 20%. Now, what this likely means is that in spite of the short-term price nonsense, miners, they remain very bullish on the long-term picture for Bitcoin. They're investing tons of money in new miners coming online all the time. But short-term, falling volume, bearish MACD crossover, rejection at key resistance again. Miners are selling, whales are creating loads of selling pressure. Market spam. Anyway, I just wanted to reiterate, I remain a big bull on Bitcoin in the long term without any doubt in my mind. Short term, you never know what kind of drama is going to go on in this market, but I do want to highlight this stuff because it's always important to keep an eye on the downside and to not fall too deeply into our own biases of what's going on in the market. But the fact that I'm talking about all this stuff probably means Bitcoin's going to pump like crazy, because that's what Bitcoin does. Everyone's too fearful. Everyone's expecting the correction. So we're probably going to pump. A big thank you to Wing Finance for sponsoring today's episode. Now, Wing is a credit-based cross-chain DeFi lending market platform. The introduction of credit mechanisms is absolutely a big step forward for the decentralized finance market. The decentralized credit score will reward trustworthy and loyal users with better rates and better ratios when using the product. And obviously, we are in dire need of cross-chain solutions as Ethereum is struggling under its own weight with just some insane fees happening right now in the DeFi space. So this is a product you can use right now if you want to. Today, you can actually deposit Ontology and receive Wing DAO tokens back. 80% of the total supply of Wing will be given out to liquidity providers. Right now, Wing only supports Ontology's ONT token, but new types of collateral will be released in the coming week, including Ethereum and wrapped Bitcoin. Now, from the 15th to the 19th, you can actually get a 10x reward bonus on your Ontology. And then from the 20th to the 24th, you can get 5x on Ontology as well as Ethereum and wrapped Bitcoin. So this is a super simple and super profitable farming opportunity out there for anyone looking to get some sweet yields. And most importantly, this is a DeFi product that you can actually use today, and it was actually developed by the Ontology core team, so it is a legit product. It's not one of those crazy fly-by-night deals, so you can feel safe using Wing Finance. So if you are an Ontology holder, then you have got to check this out. There's a link in the description where you can learn more about earning some Wing tokens and try your hand at farming some yield. Okay, on to the first big story of the day. Ethereum 2.0 is reportedly on track for a November launch, at least according to one of the developers building an ETH 2.0 client. Currently, Ethereum 2.0 is in its Mandala testnet phase, which is basically a public network created by the Ethereum Foundation that's acting as a sandbox before the actual mainnet launches. You do need to keep the source in mind here, though. This is just a developer working on the testnet. We have no official word yet from Vitalik or any other bigwigs or just the Ethereum Foundation themselves. There is, of course, a big checklist of tasks that need completing before ETH 2.0 Phase 0 can actually launch. And of course, completing successfully all of those things to be able to launch ETH 2.0 includes things like more audits and a big range of different tests. A recent critical bug found in the testnet was repaired swiftly, but it really did underline the need to get it right instead of getting it quick, which is why the testnet is here. We may not see it this year, but fingers crossed for November. That would be sweet. And finally, I want to talk with you about DeFi. By the way, I am planning a top yields video for DeFi soon, so make sure to drop any questions you have about yield farming down below. Anyway, I wanted to share this tweet from Naval Ravikant with you. He said, the next big wave in DeFi starts when Wall Street figures out that crypto has built a better casino. Love it. I love how this is both an optimistic take and yet a dig on DeFi at the same time. But look, he's right. The venture capital money, it has not really showed up in any significant way to the DeFi party yet. Yeah, we have some early movers like Andreessen Horowitz and a few others that are getting into DeFi and buying tokens and participating in governance and all that stuff, but they're the exception, not the rule. A lot of the Wall Street crowd, they're still playing with Bitcoin, if any crypto at all, and largely ignoring the entire altcoin scene. But the technology being deployed and experimented with right now is highly disruptive, and it's not going to remain outside of the big money crowd for long, which means that we are here before most of them. And, of course, the retail crowd. Remember the US Treasury bond backed fund that issued out on Ethereum? That was a big thing, but that was just the start of what's going to be an insane flood of legacy finance money coming into this space. That being said, we are still definitely in the Wild West stage of DeFi. Someone shared this great chart on Twitter the other day. It showed that a third of the new projects listed on Uniswap over a 6-hour period last weekend ended up being exit scams. That's crazy. There is intense risk right now with chasing short-term gains by speculating on some of this DeFi stuff. We have totally anonymous teams launching clones of existing protocols, and it's not ending well all the time. Sometimes it ends kind of okay. Sometimes people make tons of money. Other times people lose everything. We do have, of course, the safer DeFi protocols like Aave and Synthetics and YFI. They may not give super insane returns potential like a new Uniswap listing, but they also give you a much lower risk profile. But of course, even more established players can run into some pretty gosh darn big trouble. BZX has just suffered another exploit today. Come on, guys. Come on, again, really? BZX, man. Anyway, this happened after highly extensive audits by some of the best auditors in the industry. Now, the details of the exploit, not super important, but the key takeaway here, around $8 million in crypto was lost. Now, the insurance fund actually covers all the losses, but this absolutely serves as a reminder that risks remain even with more established players. And if you're using DeFi right now, you are a pioneer, and that comes with risks. Yes, it gets better every day, but there are casualties constantly. The risk of exit scams, the risk of smart contract bugs, and just other kinds of vulnerabilities and loopholes, they all exist. And if you think that, we have too much DeFi, we don't need any more of these clones, surely the market must be getting exhausted by now. No way. Not even close. What we are actually seeing right now is basically just the earliest iterations of some extreme cutthroat capitalistic experimentation happening in this market. The farmers are going where the money is. The farmers are going where the best product is. The money is just flowing back and forth and all over the place. It's very exciting. Here is a solid example of what's happening. So the total value locked in Sushi Swap, which is the vampire attack on Uniswap, fell by 40% just hours after the block reward was cut by 90%. Now, much of that liquidity did flow back into Uniswap. Other liquidity went to other farming opportunities, so there's no loyalty here except to the profits. By the way, if you are feeling frustrated by Ethereum's high gas fees and feel like you're missing out on all this farming craziness that's going on, then expand your horizons, man. Expand. Get on other chains. Binance Smart Chain is now offering different DeFi protocols. Tron is offering DeFi, and yes, of course, Ontology, as mentioned today, is offering great DeFi options. You can farm on all three of those chains right now, right here today. So move beyond Ethereum if you need to. Look, it can be messy, all this DeFi stuff, but it's at the same time incredibly exciting because it's the most innovative period that cryptocurrency has seen in a few years. In DeFi, I fully believe massive opportunity. If you missed buying Bitcoin or buying Ethereum 5 years ago, then this could be your defining moment as an investor. The gains that are being had right now, the gains that will be had over the coming few years, are going to mint so many new millionaires. You can be part of that club if you're willing to play with a bit of risk and to play your cards right. And of course, if you take profits, you gotta take profits, guys. Take profits, take profits. Anyway, your question for today. Do you believe that Ethereum 2.0 will be delivered this year, or are we gonna see it in 2021 sometime. Hopefully. Let me know down below in the comment section. Thank you so much for watching today's video. Long live the blockchain, and peace out till next time.